Washington, Reuters, U.S. retail sales increased more than expected in May as consumers bought motor vehicles and a range of other goods even as they paid more for gasoline, the latest indication of an acceleration in economic growth in the second quarter. Other data on Thursday showed a further tightening in labor market conditions, with first-time applications for unemployment benefits unexpectedly falling last week and the number of Americans on jobless rolls declining to a near 44-1/2-year low. The reports came a day after the Federal Reserve raised interest rates for a second time this year and offered an upbeat assessment of the economy. The U.S. Central Bank described economic activity as rising at a solid rate euro and the labor market as continuing to strengthen. The Fed forecast 2 more rate hikes in the second half of 2018. In short, the Fed was right to upgrade its assessment of economic growth to solid euro trademark in yesterday euro trademark's statement said Paul Ashworth, chief U.S. economist at Capital Economics in Toronto. The Commerce Department said retail sales jumped 0.8% last month, the biggest advance since November 2017. Data for April was revised up to show sales rising 0.4% instead of the previously reported 0.2% gain. Economists polled by Reuters had forecast retail sales rising 0.4% in May. Retail sales in May increased 5.9% from a year ago. Excluding automobiles, gasoline, building materials, and food services, retail sales rose 0.5% last month after an upwardly revised 0.6% increase in April. These so-called core retail sales correspond most closely with the consumer spending component of gross domestic product. They were previously reported to have risen 0.5% in April. The strong retail sales report added to data ranging from the labor market to manufacturing and trade in suggesting the economy was regaining momentum in the second quarter after growth slowed at the start of the year amid a sharp step down in consumer spending. Based on the core retail sales data for April and May, economists said consumer spending was so far in the second quarter rising at an annualized rate of at least 3.5%. Consumer spending, which accounts for more than 2/3 of U.S. economic activity, increased at an anemic 1.0% pace in the first quarter. Growth estimates for the April-June quarter are as high as a 4.6% rate and could get a lift from another report from the Commerce Department showing a rebound in business inventories in April. The economy grew at a 2.2% rate in the first quarter. The dollar was trading higher versus a basket of currencies also as the European Central Bank signaled it would hold rates low through mid-2019. Prices for U.S. Treasuries gained slightly. Stocks on Wall Street were higher. Tight labor market. Retail sales are being underpinned by a robust labor market, which is gradually boosting wage growth. A $1.5 trillion income tax cut, which came into effect in January, could also be lending support. In a separate report on Thursday, the Labor Department said initial claims for state unemployment benefits dropped 4,000 to a seasonally adjusted 218,000 for the week ended June 9. Economists polled by Reuters had forecast claims rising to 224,000 in the latest week. The number of people receiving benefits after an initial week of aid declined 49,000 to 1.70 million in the week ended June 2, the lowest level since December 1973. Euroeth claims data suggest that the labor market is healthy and that job growth will remain strong, said Daniel Silver, an economist at J.P. Morgan in New York. The labor market is considered to be close to or at full employment, with the jobless rate at an 18-year low of 3.8%. The unemployment rate has dropped by 0.3 percentage point this year. It is near the FED Euro trademark's forecast of 3.6% by the end of this year. Layoffs have remained very low amid signs of growing worker shortages across all sectors of the economy. There were a record 6.7 million job openings in April. The number of unemployed people per vacancy slipped to 0.9 from 1.0 in March, indicating that most people looking for a job are likely to find one. Retail sales in May were boosted by a 0.5% rise in receipts at auto dealerships. Auto sales rose 0.2% in April. Sales at service stations surged 2.0% last month, reflecting higher gasoline prices. Prices at the pump have risen by 15.5% this year, according to U.S. Energy Information Administration data. Expensive gasoline, if sustained, could pull spending away from other categories. Sales at building material stores rebounded 2.4% last month after declining 0.8% in April. Receipts at clothing stores surged 1.3%, the largest gain since March 2017. There were also hefty gains in sales at restaurants and bars as well as general merchandise stores. Consumers also spent more on online purchases, but receipts at furniture stores fell 2.4%, the largest drop since December 2013. They also continued to cut back on spending on sport and hobbies.